Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today. So apart from the stock markets and the movement today, we're also going to be focusing on the newly listed space, and that is Senco Gold, which has made a strong listing on the D Street today, 36% premium to its issue price. And to discuss now more insights on the company's future, the vision, we have with us the top management of the company. Mr. Suvankar Sen joins in. He's the Managing Director and CEO of Senco Gold. Also joining in is Sanjay Banka, CFO of Senco Gold. Good afternoon and welcome to both of you. Thank you so much for taking the time out for this discussion, and many congratulations to both of you for making this very, very strong debut on the D Street. So definitely smiling, happy faces is what I see. So help all our viewers first understand what next for the company. The journey on the D Street has started with a bang. What do we expect going forward?
So at Senco Gold and Diamonds, Sakshi, it's a company of more than 50 years, a long legacy. We are working with our karigars for a long, long period of time, and the products that we are creating, around 85% of the products are gold jewelry, around 11% of the products are diamond jewelry, and we are creating products with an average ticket size of 60 to 70,000 only. So
Okay.
the upper middle class of the economy can it's kind of product, in spite of the gold prices going up, the designs that we are creating, people can keep buying. So that is the USP with which we are working. And the other aspect, which gives us great happiness, is that the franchisee model that we had started much before in the year 2000, it was a vision of my father that along with your company operated stores at the larger cities of the country, we should have franchisees having local partners in the tier 2, 3, 4 cities of the country. And today,
Right.
fulfilling that vision of the IPO and taking the business model forward, we have been able to achieve it. So it only gives us the opportunity to scale up more, penetrating into the smaller towns of the country and grow with the rural Bharat growth. So this is how we are looking at it.
That's wonderful. You very well put the context of what you want to do. Let's break it down further for all our viewers to understand it further. Senco Gold, very well known jewelry company in the eastern part of the country. You have a sizable customer base right there. The company has a vast retail network of 136 showrooms and store networks. However, if we see a large part of it, 63% of the showrooms are still in West Bengal. So going forward, what is the expansion plan? How are you looking to expand your presence geographically?
So looking at the past, it speaks a lot about the way we will strategize for the future also. We are very conscious of the strengths that are there in the company, and we would like to continue to leverage on the strengths. So our focus for business growth will continue to be eastern part of the country. As you said, that 63% is a particular state, which is West Bengal. 80% of our business comes from the eastern part of the country. Around 15% comes from the northern part of the country, and 5-6% comes from the western and the southern part. So
Sure.
to leverage the strain, to work on the economies of scale, the future will be very much focused on the growth in the eastern and the northern part of the country.
Okay. Mr. Banka, if you could take that question forward and detail for all our viewers, both in terms of the revenue mix. We got a little sense from Mr. Sen. He talked about 80% of your product mix is gold, whereas the rest of it is diamond largely. Geographical presence, he's talking about 80% in the eastern part. So if you could break it down further for all our viewers, going forward, what is your revenue mix going to be like? What is your geographical mix going to be like?
So see, if you look at our revenue mix, we see from two, three angles. One is the jewelry. We see our stud ratio, which is diamond jewelry. That is around 11%, around 85 is gold. Balance is silver, platinum, and so on. So as we move forward, we have to improve our gross margin and to deliver superior return. So that's why we are looking at improving our stud ratio. So if you see the average stud ratio in the market is around 15%, where the top player has got 25%. So we are definitely, we take inspiration from the best in the industry. That is our business model, because we believe in understanding the best and doing the best in the industry. So stud ratio is one which we will look forward to improve every year, at least by 100 basis points. That's one. But and as far as our business model from own and store and franchise is concerned, 65% of our revenue is from own store, 35 is from the franchisee. We will
Okay.
like a similar growth ratio for own store and franchisee store. While the
Okay.
number of stores can be 50-50, But in terms of revenue mix, it will be 65-35, or let's say 60-40. That will depend upon the market practice. So if you are aware about a franchisee business model, it's an asset light model, and the gross and a return on net worth on a franchisee business is
Hmm.
at least 3x versus the return on net worth on the own store. So that is what will continue to leverage and make our business much more stronger.
Right. Mr. Banka, if you could also help us, we're talking about the number of stores that you currently have. When you want to expand, how many of homegrown stores and how many of franchise models are we going to see perhaps in 1 or 2 years if you have that visibility?
So if you look at the funds which we are raising around 405 crore, 135, that is for the OFS portion. It will go to SAP partners. They
Hmm.
are exiting, they are only monetizing one third of their holding, and they are here for long term. That is two
Hmm.
third, they will still continue. So balance 270 crore, that is what is being used for the working capital, that is for the jewelry. As you have said, the opening one store requires 16 to 17 crore of inventory and around 2 crores for capex. So this
Hmm.
will give us around 15 to 16 new stores. So which will give us a ammunition for 3 years. In the past, if you see, we've opened 5 to 6 stores. So 15 stores we are opening with this fund. And then we look at, let's say, have around 10 15 new and 15 own and 10 franchisee. This is the momentum we'd like to maintain for next 2 to 3 years going forward.
Okay, okay, Mr. Sen, you did say that a lot of your focus is on the middle class because of the smaller ticket items vis-a-vis the other jewelry stores is perhaps giving you the edge. Is that the edge you go ahead in competition space as well in North India? We have marquee players right here who've been holding the ground and a larger market share for a long time. How do you break into that, and what kind of market share are you looking to grab from that space then?
So Sakshi, it's like we need to understand the market size that is there. Around 6 lakh crore is the market size of the industry. And what we are seeing over the last 10 years is a steady shift from the unorganized to the organized segment. And I think that it is already those established players who have been there, have been along with us, the way we are converting the unorganized into the organized play. They are also doing a similar manner. So it is not really a direct competition with them, but it is a collaborative effort of ensuring that as an industry, we are getting more and more organized. Our customers are getting better services, better designs. And I guess that play of unorganized to organized is what we both will, and everyone, all of us, not both, I would say that whoever is there in the industry, we will
Yeah.
all play together.
Okay. Mr. Ivanka, your company's financial performance has been decent. We've been seeing increasing 2 year CAGR of 24% for the revenue front, 61% for profit after tax. You also reported a 158 crore rupees net profit for FY23 compared to 129 crores a year before. So the top line and the bottom line look strong. Are you going to sustain this growth? How much growth do you see going forward from here? Margins perspective, what do you currently have and what is the visibility?
See, actually, margins are seen in the industry from three perspectives. One is the gross margin, which is a blended gross margin. If you see, our blended gross margin has been in the range of 15 to 16%. So
Hmm.
as we grow, we look at our blended gross margin is in the same range. While the competition pressure can come, we will mitigate it with the stud ratio. But our cost structure is extremely unique. As we say, we have a strategic locational advantage. So that will help us to improve our EBITDA margin, point one. And I'm not quoting the numbers, I'm making it more simple. Similarly, our borrowing cost has been in the range of 6% for last 2 years, the blended borrowing cost, because we are borrowing a gold metal loan at a cheaper rate. So
Yeah.
as we generate more cash flow in the future, our borrowing cost and credit rating will further improve, which will all flow to the PAT margin. So we look at improvement in the PAT margin in terms of percentage consistently.
Okay. Okay. Mrs. Sen, what's the kind of gold jewelry demand trends you're looking like at right now? Looking at the price hike that we've been seeing in gold prices, going forward also, and any impact from the recent announcement from the government on the import curbs on the plain gold jewelry, if you could give us that sense too.
All I can say is that the jewelry sector as such, they import very little. So therefore, the curb that the government has brought in will surely help in curbing the current account deficit. But as far as the impact on the industry is concerned, and also for us at Senco Gold and Diamond, it has no major impact. Almost of our manufacturing is done in the country, and what is imported is gold bars by the banks. So that is how it works. So there is no real impact. And as far as the trends in the jewelry industry that we see, one thing is, with the increase in gold price, people are looking for products that are within the budget. The design trends have a lot of colored stones adding to the gold that they are wearing in order to make it look more spread out, but within the ticket size. And also, along with the growth in the gold jewelry sector, we are seeing a large growth happening in the diamond jewelry segment. Last
Okay.
year for us itself, we had a 30-35% growth in terms of volume and value for the diamond jewelry segment. So for daily wear, everyday wear, or even for special occasions like anniversaries or birthdays, we are looking at the young generation consumer. And I would say that today young doesn't mean 20 to 30. Today a 40-year-old is also considered young in the way they behave, in the way they think. Everyone is feeling younger, so they are also buying diamond jewelry to celebrate their special occasions. And that is how we are quite confident that the future growth in the studded share will continue to grow for the industry, for us as well. And that is how it is.
Okay, well, many thanks, Mr. Sen, and many thanks, Mr. Banka, for being with us on the show, discussing all these insights. Many congratulations yet again for a solid start on the D Street, and we will have many more occasions when we will get more insights from the business going forward from here too. Many thanks for joining us on Business Today TV. Let's quickly look at how Senco Gold's share is doing at this point in time. 414 currently, about 30.7% uptick even now. Premium of 36%, still holding up above 30% on the day one. The markets also in tandem, you can see a 0.3% kind of a move on both the Nifty and the Sensex currently. So that's the the prices are not as reflecting because of the day one move that we are seeing right now, and that's why it's a slip from the day's high point, and that is what is being reflected. But from the issue price, if you see, it's still hovering about 30% higher in trade. Let's also look at the broader markets, the Nifty Bank. See where is the movement really coming in from for the markets. Are there any supports coming in from the sectoral indices, from the mid and the small cap space as well? We've been seeing the mid and the small caps also contributing quite sharply to the markets going forward, and you do see some movement on that as well. So let's look at some of the other sectoral indices as well. Let's look at the mid cap and the small cap. You can see the small cap 100 index up by 0.8%, half odd percent gains coming in on the mid cap 100 index. So those are the two indices that are doing better than the benchmark indices. The Nifty Bank is absolutely flat, choppiness right from the point one we started, and it's still very, very volatile. Let's look at the constituents. Let's look at the FMCG, for example. That's doing slightly better. Half odd percent gains coming in for the FMCG pack. You're looking at gains on the IT pack. That's the index to watch out for. 3% higher. What a strong move. You've had 3 of the top 4 IT firms reporting their earnings. 2 of them below estimates, missing their estimates, 1 of them in line with estimates, but definitely again a muted set of earnings. They've been talking about the slowdown concerns that they are bracing at this point in time as well. But despite that, the stocks are going higher. 3.02% higher for the IT index. Watch out for this space. We do have some of the other realty space. That's the index that you should watch out for. 1% higher for the realty stocks as well. The oil and gas basket, that's up by half odd percent. The metal space shining brighter, half odd percent gains coming in for this one too. FMCG we already pointed out, half odd percent gains coming for this one. The pharma pack is moving higher, 0.3% of gains coming in for that one. But let's look at where is the contribution not coming in from. You can see consumer durables are sulking, healthcare index is slightly down in trade, PSU banks absolutely flat with a negative bias, financial services flat with a negative bias. So those are the indices that are not really contributing up until the first half of the trading session. Now let's also look at the basket from the Nifty gainers and the loser space to see which are the large caps that are supporting the move on the Nifty index, for example. So you do have Tech Mahindra, TCS, Infosys very, very clearly. The IT pack clearly contributing 3.5%, 4% kind of a move right here. We have our market expert with us. Mr. Rajesh Agarwal joins in. from AUM Capital. Welcome, sir, and thank you so much for taking the time out for this discussion. Well, the markets are looking like they're stabilizing their move after yesterday's swing trade that we saw yesterday. Two or three things that we want to understand from you. I was talking about the IT stocks, so let's start off with that because we've had three of the top four IT firms already report their earnings: TCS, HCL Tech, and Wipro. The IT index is the top gainer today, 3%, and this is despite most of these companies have actually reported either muted or disappointed earnings this time around. Your thoughts of what is still moving the IT index and the stocks?
Good afternoon, Shakti. Thank you for calling. You said it right. IT has been performing today and day before yesterday also it was performing. And what we believe that most of the negative that has been there in IT stocks, be it of recession in the foreign markets or high attrition rate, these things have been put behind. The biggest headache of high attrition rate in almost all the top IT companies has been taken care of, and these times the attrition rates are not that high. Although performance has been muted, but that was expected. Nobody expected that the performance to go up. If you talk of valuations are very attractive, I would say, for the top run companies, at least TCS, Wipro, or Infosys. Our first pick would be Infosys in this sense. Deal wins has been good. We believe that going forward, I won't be surprised if another 10-15% up move from the current market price in these two, three top run companies in the next two quarters happen. So we have recommended these stocks to our clients based on this, that almost all the negatives has been discounted.
Okay, all the negatives are mostly discounted in the IT pack, and that's what is leading to this bump up in the IT shares and the index, which is at the day's high level right now. Let's also talk about the newly listed stock, Senco Gold, that had a 36% premium listing, still hovering about 30% higher from the issue price. Your thoughts, sir, on Senco Gold? We did have the management just now. They talked about, completely focusing on the middle class and having a smaller ticket jewelry items, which has been their edge in the Eastern India market, also to continue in the central northern market as well going forward from here. And that's going to be their focus, and that's how they're going to be keeping an edge over the competition. Your own sense of the company, the kind of gains that we've seen here, and the strategy that you will recommend investors now.
See, the company, I believe, is very good in terms of reach. I would say they have almost 5 decades of experience with them, 136 showrooms, out of which 75 are their company operated. Numbers has been good. Top line has grown from 2660 crores in FY21 to 4077 crores, growing at a CAGR of around 24% in the last 2 years. Net profit has gone up by 2.6% in the same period. What has basically happened is the GST implementation and the demonetization has taken the erstwhile tax arbitrage which was there, and people have moved from unorganized players to organized players, and this is aiding to their growth. Secondly, the hallmark thing and all those things that have come up with the new regulations, I think that's one of the another major factor. And what's going in favor of Senco is the valuation. If you talk of valuation and you compare it with Titan or Kalyan Jewelers, it's still trading at a discount to them, despite the fact that it has got a stellar listing today. So I think maybe a 430, 440 odd levels in the next few days is quite possible. But what I would like to say is, if whoever taken for a flipping motive should book profit at this point of time, maybe re-enter at lower levels. The only concern with the company, I believe, is high debt, which is a concern going forward.
Okay, high debt is a concern. Barring that, the company's stock still has a potential to reach back to 430, 440 odd levels, but profit booking advised for all of those allottees in the IPO, and maybe looking at a re-entering opposition when opportunity whenever the price is correct as well. So that's as far as the new listing is concerned. 2 or 3 stocks that are buzzing in trade. Let's talk about JBM Auto, for example. This stock has rallied very, very sharply today. In fact, 18% odd is what we have seen as a move. on this stock already. 52-week high levels for JBM Auto, bagging a huge order to supply electric buses. 5,000 buses order is what they have got, electric buses. 1461 currently for the stock, 145 rupees up, 11% higher in trade right now. Your thoughts, sir, on JBM Auto?
We are very bullish on this stock. We have been recommending this to our clients since 480, 500 odd levels. This was just 1 year back, if I'm not wrong.
Okay.
This is basically an auto ancillary company which moved into bus manufacturing. That was the first in India which was ready BS4 compliant CNG buses for public transportation. And they first got order of 500 odd buses from various state governments. And now this new 5,000 buses order. This is a big boost for the company going forward, as we all know that electric buses are now the in thing.
Yeah.
So, although it has run up quite a lot in the recent past, I think for new entry, one should wait for correction. Otherwise, somebody holding can continue to hold.
Got that, understood that. Another stock that I wanted to discuss with you is Patanjali Foods. Now, this company has been in, of course, in news, and that's amidst its OFS. The shares hit a 5% lower circuit yesterday, and hit a 5% upper circuit then today. Currently at 1223 odd levels. Your own sense, the retail investors have got an opportunity to enter in Patanjali Foods today and or participate in the OFS. Your thoughts on how should one be looking at this stock?
See, for just OFS flipping, I think one can subscribe to this, sell once they get the subscription. But for a long-term horizon, I think although the company is doing well, the numbers have been improving. They are into soya and dabble oils, and they're planning to move into new products. But still, I think there are better options available in the market like ITC. I would prefer any day above Patanjali. So for a short-term gain, I think Patanjali gives an opportunity. But for a longer-term horizon, I would prefer ITC.
Okay, understood that. Well, many thanks, Mr. Agarwal, for being with us and sharing all these insights with all our viewers and strategies on all these specific stocks and sectors also. Markets looking up 200 points higher, 65,759 currently for the Sensex, the Nifty hovering 62 points higher in trade. We'll continue to watch out for every movement in the market so that you know exactly where your focus should be on D Street when it comes to your equity investments. So do stay tuned with us onto Business Today TV, and don't forget to subscribe to this channel and continue to engage with us on our other social media platforms as well: Facebook, Twitter, LinkedIn and Instagram. Until then, thanks for tuning in.